First-time buyers are the lifeblood of our country's housing industry and an important support for all of our home values. As first-timers enter the market, they allow everyone else to move up and out, keeping all of our home values and our personal wealth growing. Since 1934, first-time buyers, who typically have less time to accumulate a down payment and build a strong credit score, have relied on FHA home mortgage loans, which allow down payments as low as 3.5% and scores in the mid-500 range. FHA insures these loans, essentially agreeing to pay the bank if a borrower defaults so that banks are willing to make them.
One of the most significant things about FHA is for a first-time home buyer, all they need is 3.5% down. There are some who would try and change that program and require 20% down, and that would take a lot of people out of the market. It would make it almost impossible for people to buy.
When the bubble burst and banks stopped lending, FHA stepped in, backing more loans than before. In fact, had FHA not been there when the bubble burst, it's estimated that home prices could have dropped another 25%. As millions defaulted and lost their homes, FHA absorbed the losses, and for the first time in its 80-year history, had to borrow $1.7 billion in taxpayer money, and now needs to shore up its capital reserves. As a result, things at FHA have changed, and the ripple effects are impacting all of us. For example, FHA lowered its maximum loan amounts in many areas, and the upfront and monthly ongoing mortgage insurance that borrowers pay to FHA to insure their loan have gone up multiple times since 2010. They're now almost a quarter of most borrowers' monthly payments. And even though mortgage insurance used to only be required until a borrower paid down his loan and accumulated equity in his home, under new rules, mortgage insurance must now be paid for the entire life of the loan. Now, these and other changes are preventing over 250,000 buyers a year from qualifying for loans and buying homes. In 2007, 42% of young Americans owned a home. Now only 36% do.
We're hoping that the legislative process will preserve the FHA loan program for not only first-time home buyers, but for other people, repeat buyers, and that they'd be able to keep that down payment at no more than 5%, and that we be able to increase the loan limits to a level where in the big expensive markets, people will still be able to utilize FHA loans.
Opponents say FHA's role in housing finance should be reduced in order to protect taxpayers from potential losses and to make room for private investors.
I think the government needs to take a look at programs like FHA and allow them to adjust to the nuances of particular markets, not be so rigid in their guidelines, take a look at things like forms of ownership like condominiums, make financing available in a broader range of condominiums, and be more flexible to adapt to what goes on a day-to-day basis in the markets.
They have to come up with guidelines that have good common sense.
Tell us what you think about government's role in housing and changes at FHA, or email your questions to asktheexpert@shariolefson.com.